We got the futures up sharply on a Sunday afternoon. I think it's on news that the Chinese have agreed to buy a certain amount of, or increase their sales of, or purchases rather, of U.S. goods and services. And I suppose that's seen as some sort of a compromise move. So the futures are reacting sharply. I notice if you look at the chart of the ES here, the S&P minis, we're up 19 right now, but it's taking you right back to the top of this range here. So here's the futures up here, if you're wondering. But this will take you to the top of the range on the futures, so that's where it'll open up tomorrow. And on the NASDAQ futures, or the NDX, it's basically just taking you back above the 10-day moving average. So we're still going to be stuck in this little range here after breaking down on Tuesday. So with everything gapping up in the morning, we'll see if this holds up. It may not hold up. I'm just wondering if there isn't a move to fade here. And so this may be a little bit of a radical idea, but I want to throw that out there because I don't think that the China thing was the be-all, end-all of the market. You've seen Caterpillar, stocks like Caterpillar already rallying. Boeing had a pocket pivot on Friday. This is actually TC2000, which I'm using. This is a daily chart on the right side. You can see, though, Boeing had a pocket pivot here, and it's sort of a low-range breakout. Let me shrink this baby down. Let's see. Here we go. So you got this low-range breakout. You're coming through here. Volume picks up. It's a pocket pivot type move coming up through the top of the range. Also, more or less off of the 10-day line. If you look at it real closely, you can see that it started from a point not too far from the 10-day line. But really, the buy point on this, if you're paying attention, was the undercut and rally move you had through that low on this day. So the volume picked up. And that might have been your first hint that things were going to settle down with the Chinese thing. As I've been saying, I didn't really see it as something that would resolve too negatively, and there might be a reaction rather a movement by stocks affected by the tariffs as a result of that. Anyways, let's see. Futures Nasdaq coming in. I wouldn't be surprised if they bring them in a little bit tomorrow morning. But what I'd be watching is maybe it's something to fade. And there's a couple of things I'm looking at here. So I'm using TC2000. I might interject with the little market smith here just to kind of mix it up. But, when I look at names like Apple, here I got a weekly on the left here, okay, and a daily on the right. The stock's straight up off the lows of the base here. And the spot to be buying was when I was talking about the undercut and rally down in here. If you guys remember one of my first videos when I started doing video reports. So we broke out 3 weeks ago, ran out of gas last week, stalling out, volume's drying up today. You're kind of coming through the 10-day line. It almost seems to me like you need to come back into the 180 area, the 20-day line, somewhere around there because of the sharpness of this rally. So if we open up, it wouldn't surprise me if we saw things pull back in on a sell the news type of move. And that might be something to look for as a tactical shorting opportunity. So, we'll see. But, I look at names like BABA, and I think IBD is saying this is on the comeback trail and it's ready to go again. But really what you have here is a very choppy, sloppy base. And you get some selling, coming down the right side. We got a move back up on earnings, but you're just back up to the 200 level on the top of this base, which could easily turn into a failure back to the downside. You've been stalling for the last 2 weeks, hit above average volume prior week, and then last week volume was weak as it tried to move higher but couldn't quite get through the $200 price level. So these are in an extended position at the top of the ranges. So to me, the way this market's been acting, unless we're going to assume that tomorrow we're going to gap up and start a glorious new uptrend through the highs and we're off and running, and that's going to see names like BABA break out and Apple's going to go through 200. That could always happen, but it seems to me that the odds are we might see something pull the other way. And so I just want to be aware of that because I don't get myself worked up into a frenzy in one direction or the other. I look at things from a contrarian nature at times. My antenna go up when things are looking really good and rallying and everything's coming off the lows. I'll start looking for an inflection point because really where you've been able to make most of your money in this market has been on the moves from the inflection points both up and down because they have been sharp rather. and short. So when you look at names like Baba, for example, well, where are you making money here? You get the break, that's a short. You get the rally up, back up, you'd be long, short again, long again, and you're basically forming this choppy pattern. You'll see this in a lot of stocks. Let's look at a name like Baidu, which got ripped on Friday because their COO left. Uh, and so the stock just got reamed on huge volume. Here it is coming down through the 20-day line. Looks like it probably is headed for the 50-day line. Trying to catch a falling knife for sure. But notice on the weekly chart, you had a rally up to highs, a breakout or an attempt at a breakout here that fails, and a breakout here that fails. Now another breakout that's failing. Okay, so again, what do you notice about this pattern? Well, the way to play this is on a contrarian basis. When you get to the highs of the range, you short it. When you get to the lows, you try and go long if you can find a coherent buy spot. Probably an undercut and rally, because you can see in here, if you look at this carefully, you see the lows in here, and the move back above that low here, and then back above that low again here. So you had a couple undercut and rallies that trigger the long play in the thing if you play them that way, and you get a nice sharp move to the upside. That's playable, but then it runs out of gas, and that's pretty typical of what you see in a lot of patterns. Here's Salesforce, and what I would note here is you have a sharp break off the peak on the heaviest volume in the pattern on the weekly chart, and now you rally back into the highs on light volume, light weekly volume. So it's a weak rally back up into the highs. It looks double toppy to me. That doesn't look to me like a pattern I necessarily want to be buying. On the daily chart, you can see you got hit with volume on Friday, and you're back down to the 20-day line, but you're holding. So a break below the 20-day line would confirm this as a late stage base failure. And that's what I'm watching on other names like Nvidia, Netflix, Amazon, and so on. I think I've got them on here. Let's take a look real quick. I already looked at these in the report, but look at the weekly chart. Netflix is Nvidia. Where was I? What happened? No, Nvidia is a failed base breakout, but you can see it's a very choppy, ugly base. It's not really tight. It's pretty loose, and it's starting to fail. And maybe they rally it back up to the 10-day line tomorrow, and it becomes a short, and then it rolls over. I don't know. That's just one thing I would be watching for. Instead of leaning in one direction or another, since we've been up for a little bit here, maybe we inflect back to the other side. And since I've already got all my longs in place, I'm thinking about where we're going from here. So the other thing I find very interesting is, well, let's quickly look at Netflix on the weekly chart. It's a cup with handle. You're wedging up on 2 weeks here and moving back to the highs. Now you're pulling back, volume's trying up. That looks somewhat constructive, but that's one to keep an eye on as well. So Amazon, same thing. It's kind of a funky cup with handle, but look at the huge moves these things have had. So you're 3 weeks down, you find support, and you're back up right up to the highs immediately, and wedging back up and pulling back a little bit like Netflix. So you could have a move to the upside tomorrow that gets sold into. Who knows? That's kind of what I'm thinking might be the possibility here, and something to definitely be watching for, because you're not going to be buying anything. The time to be buying things is when they pulled back earlier in the week, this past week, which I was talking about in the prior reports and video reports. So that came and went. Now you've got everything jacking, and the question is, are you going to sit back and try to play the big move like you're going to get one, or are things in a position where they might just swing back to the other side? So I see that in a lot of names that are extended anyways. The other thing I find interesting here is that if you look at the financials, this is Citigroup here on a weekly chart, and you can see that it's broken down, it's undercut this low in the pattern and rallied a couple of times. So I think you had another undercut and rally here where it undercuts this low on this day or week rather, and turns back to the upside. I think that shows up here on the daily chart, and now you're getting resistance at the 200-day line. It rolled up through it and then rolled down through it last week. What is it telling you? Financials are coming off. The XLF is coming off, almost looks shortable up here with interest rates rising. I think what the problem is that the Fed probably doesn't need to raise interest rates. This is something I was talking about in the report, and therefore all you're doing here by raising the short end is flattening the yield curve. And banks make their money on the spread between long and short-term rates because they lend long and borrow short, and so they make the difference. So if the yield curve is flattening, that's probably not good for their business. That's why the XLF is coming off. JP Morgan looking like it could fail here. It's breaking back below the 50-day line here. Bank of America, BAC doing the same thing. And you can see these are patterns. They look like head and shoulders type setups here. There's your head. You get the left shoulder over here and the right shoulder here. A couple of them maybe. Look at Goldman Sachs. It's just been ugly for a while and ran up into the 200-day line last Monday, I believe, and reversed there and has come lower since. And all this as well, supposedly there's more evidence of the Fed raising rates, and we've seen the TNX, which I think is, yeah, there it is. We saw the TNX break out to a new high or 4-year high. On the weekly chart, that's what it kind of looks like. You can see that back in 2010, 2011, it was higher. So it could go higher. But I might argue for the possibility that the economy isn't as strong as they like to think it is, and with a flattening yield curve, just checking the futures again, we might see things come in on a gap up move. So it may just set things up. So that's what I'm looking for. And I see, names look at Facebook straight up from the bottom and straight back to the highs. And of course, the assumption here is that they're going to keep growing. But notice that as you come up higher here, your volume has just been drying up and the buying seems to be diminishing. I mean, the time to buy it was either on this buyable gap up or along the 200-day line, I think, or just close your eyes and buy it down here at 150. It's now way extended and way up there. So let's see some other ones. If you look at, say, Microsoft, look at it on a weekly chart. It's just been a very choppy affair. Nothing really coherent, nothing tight. And they probably open this up close to the highs of the range tomorrow, and then maybe we just flip right back to the other side. Wells Fargo is another financial that just looks like garbage. You can see on the weekly chart here, this thing was ripping to the upside at the beginning of the year because, of course, rates were going to the moon and all was right with the world again, and we were going to normalize interest rates, blah, 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 and you broke down to the lows of this range, rallied off the lows up near the 200-day line, 40-week moving average on the weekly, and you're rolling back. So not what I would call indicative of a rising interest rate environment with a strong economy producing a rising yield curve. So, which is very favorable for financials, and you're seeing a lot of the big financials getting hacked. A lot of them are too far down for me to want to short unless you get a rally back up into the moving averages. Maybe you see that tomorrow. I don't know. Let's see. Some other names that pop up. Weight Watchers finally got hit with some volume. That thing broke out again. Another re-breakout. It fails badly here on a reversal and heavy volume. And as is so typical of the market, bounces off the 50-day line and re-breaks out and continues higher. Now it's coming in. Volume picked up on Friday. I'm wondering if this is going to turn into a failure. So when I'm watching, I wouldn't want to buy it now, and I'm not really interested in buying it on a pullback to the 10-day line because it's somewhat late stage. If you look at this, it's up there. It's been up there for a while. And usually after the longer the run is, the shorter the base, after the longer the run, the greater the probability that it could fail. You want to see long bases occur after a big run-up. So, for example, when Weight Watchers had this big run-up, this was a nice long base. Here it was premature on the breakout, probably a little premature here. And then finally, you'd put in enough time such that it was able to pull out of here. And that was a big winner for us at the beginning of the year. If anybody was reading the report at that time, I called the buy, I think the day before it launched, and it just took off from there, and it was up a huge amount very rapidly, and that was a good way to start the year off. Anyways, let's see. I'm going to go to my other video list here. Anybody notice BlackBerry, after looking pretty ugly down here, it posted a pocket pivot here, down in here, deep doo-doo type one off the 10-day line here, and then bounced and has rallied above the 50-day line. Even had a pocket pivot coming up through the 50-day line on this day here. Not sure if you can see that. That would be this day here. Now you're drifting back into the 50-day line with volume drying up. So that's an ugly duckling position. And it kind of makes me think of another stock, Snap, which is a dog and looks terrible and has been beaten to death. You had a little undercut and rally move on Friday, but it didn't really carry through to the upside. I figured the 10-day line would be resistance. It has to get through there decisively to confirm, but it did have a move above this low in here, which I think is 1051 or 1050, one of these two. You got to check them, and that would be your reference low. But it didn't quite make it. But when you look at something like BlackBerry, when these things look pretty ugly, they can have some pretty decent moves to the upside. So that's the essence of the ugly duckling market that we're in. So, that's just the way it rolls. FireEye covered in the report. I'm looking at this, and we'll see what it does tomorrow. But if it gaps up, it's really not in a buyable position. Anybody having fun with Funko? I called it a buy along the in here when it was in this handle area, when it was sitting along the 10-day and the 20-day here, and it's popped and thin trader, but it's moving higher, and it's had some good volume, and it came out with decent earnings. So, that's an interesting name, a thin one. Watching Bitcoin here. Notice on Friday it held the 200-day line just barely over here, and here's the weekly chart, sitting just below the 40-week line. GDI, I just wanted to bring up, that was one I talked about when it was sitting at the 50-day line, and it's run up from there. So that, you got to get these things buy it when it's quiet, as I like to say, but you got to get them when they're sitting there waiting to be bought. Lumentum, we'll see what happens. I don't know if the news about China, assuming that's why the futures are running, I am assuming that, but I haven't really spent my Sunday looking at all the news. I got better things to do other than to watch all the fake news. But in any case, you have an undercut of this low, and I talked about this in the report, so we'll see what it does. I notice, Nike looks really good on a breakout, and everybody's talking about the breakout, but look at how erratic this is. You break out here and you fail. You break out again and you fail. And now you're breaking out again. So do you really want to buy it up here? Not really. Probably buying it on the pullbacks into the base is where you want to buy it, and that's kind of been the case with most stocks that even act well. So Roku, I talked about when it was sitting along the 10-day and the 20-day last week, and it's popped, but it kind of stalled on Friday. We'll see what happens. I'm not really sure about that. I think if it comes in the 20-day line again and volume dries up, then it might give you another entry, but it seems like it's trying to turn. Spot is one to watch, but it may not get it tomorrow. It's an undercut of these lows down here, and then a rally back up through. If you see that, that would present your next entry point for the stock. So there's really no breakouts, and there was never really any IPO base in here. So it hasn't really set up yet. If you look at it on a weekly chart over here, we can do that by doing this. You're getting a lot of selling, on the IPO, the big rally up got sold into, the breakout here got sold into, but that wasn't really a base. It's 1 week down. 1, 2, 3 weeks up. That's not a base. They got to be down weeks. So now you get some down weeks. You got 1 week down week here. This one's flat roughly, but still part of the base, and a third week that's part of the base. So now you're building a base, 3 weeks. Now you can see where it goes. So tomorrow morning we're going to have STG. We're also going to have 58.com, WUBA, before the opening tomorrow. So that thing gapped down on Friday to the 50-day line. We'll see what happens tomorrow. This could have something going on. So like Baozun, watch for a Bible gap up. So Twitter looks good. I like it. Hanging tight. I keep thinking you could have a sharp yank to the 50-day line, and I kind of want to be opportunistic there. But the other thing is it could hold here along the 10-day or the 20-day because volume's been drying up pretty sharply. So I suppose we'll see. Then finally, last but not least, a couple of groups. I'm not sure. This Take Two looks kind of interesting, but it's kind of extended for me. Electronic Arts has broken out, but looks kind of extended to me. It had its move off the lows, and of course you're going to see the typical undercut and rally move that sends this thing rocketing to the upside. Probably had some help from earnings, but I think all these gamers are coming back because of this Fortnite game that's really hot all of a sudden. Activision also hanging along the 10-day line. It's looking like it might want to try and turn, but to me it seems like it would need more time in here. It's had the move off the lows, so I'm not necessarily a big buyer. I notice also steels were moving. RS breaks out, but again, these tend to be choppy things that when they break out, that's not really where you want to be buying them. Meanwhile, X, you're going to notice kind of on the weekly chart, it's trying to come up. It runs into resistance along these highs, and rolling back on higher volume on Friday. And you can see that you're sort of, you're not sort of, you are in a head and shoulders type formation. That's kind of a funky looking head and shoulder. Let me try that again. Left shoulder, head, right shoulder, and then another right shoulder possibly. And you got, all the heavy volume defines the right side of the head, and you break down with a heavy volume on and the volume pattern is actually higher here than it is here on the left shoulder, so that looks bearish. So maybe this thing rolls over and everything's copacetic with the tariffs and everything. I don't know, maybe X doesn't have an advantage here. Some of the other steels have been trying to rally, but in my view, those are extended and I'm not really going to chase them. So, just some thoughts on a Sunday afternoon with the futures starting to kind of come in. Not really that exciting. I might be ticked off, if they bring them in all the way by the opening tomorrow. They just kind of drift back in. Wait, what's going on here? Dow, I mean, earlier I saw this thing head up like 67, 68, and this guy was up 21 or something like that. Now they're kind of drifting in a little bit. We'll see. And it could end up being a sell the news type thing. So one way to play it is if they gap up all these NASDAQ names. One thing I've been watching is the SQQQ. See if you get a buy signal sometime in the morning on a MACD cross, and maybe you could play sort of a group short on the big stock NASDAQ names using the SQQQ. So, I mean, that's a possibility. But we still have to see how things play out tomorrow. All I know is that my longs are going to be gapping up tomorrow, and I have to think about whether I'm going to try and play them for a bigger trend, assuming that, what we've had over the last week or so before we pulled back over the last few days, and off of the early May lows, the nice move we've had, as if that hasn't been enough. So, it's the piggy principle. Anyways, and also you want to keep a two-sided view of things, and your antenna go up in a contrarian sort of way when things get a little bit too, as I like to say, frothalicious. So, so play it as it lies. We'll see what shakes tomorrow. Should be an interesting day with the futures gapping up, assuming it all holds up. So anyways, thanks for showing up. As always, you guys have a great rest of your Sunday and take care.